everybody, Mike DeSepoli, Heritage Financial Advisory. Welcome to Heritage Insider Weekly for Friday, October 31st, 2025, the Halloween edition of Heritage Insider. We are back to update you again on the markets and the economy. It was a big week for the markets this week, folks. We had a lot of action. We had earnings, we had the Fed, and after the big multi-week void of any data or catalyst for the market whatsoever due to the government shutdown, we finally got something for the market to sink its teeth into this week. Overall, market's shaping up to put up another strong week here as we have just a couple hours to go in the close here on Friday. You can see the 5-day view of the markets below. Markets looking to notch another winning week this week on the back of last week as well. So we had a lot of catalysts. Let's run through them all here, starting with the Federal Reserve. The Federal Reserve, as widely expected, cut interest rates on Wednesday by 1/4%. That was widely expected by the market. And that is the second consecutive cut from Jerome Powell and the Fed. Their next meeting is not in November, it's in December. So there's a 2-month stretch here between meetings, or about six and a half weeks, if you will. And Powell, like he always likes to do, right, likes to dump a little cold water on things. So he raised a little bit of doubts about whether they'd be cutting in December as well. So I'm here to tell you that I believe they will be cutting rates in December. The bond market is screaming at them to cut interest rates, and they would be foolish not to listen. So we got 1/4% in October. Let's look for another 1/4% in December as rates continue to move lower. We also had a slew of earnings this week, right? This was very important because for all the talk out there about this market being a bubble and AI being a bubble, this is where the rubber meets the road, where companies get to tell you what their quarter was like, and more importantly, what is their guidance for the next quarter. Talking about capital expenditures and all that stuff, investment and the like. So very good, very important, if you will, to see good numbers out of these companies as their stock prices continue to move higher. We heard from Alphabet, right, formerly known as Google. We saw their stock jump 4% after posting strong earnings results. They had an actual backlog, if you can imagine, $155 billion backlog of people who are looking for Google Cloud services. So that's just a tremendous market opportunity there. They continue to prove that they are one of the leaders of AI, and they have a lot of money going back into reinvestment of the AI infrastructure. So that was great to see as well. Then we heard from Amazon. Amazon stock soars 12% on a third quarter beat with increased spending guidance. So two very important things I want to highlight here. Number one, CapEx spending. They projected they're going to spend another $125 billion, over the next year, building out AI data centers, cloud centers, and the likes, right? So when you hear all this talk about bubbles and that there's nothing to back it up, here is the largest consumer discretionary company in the world telling you that they're going to spend $125 billion to try to seize the opportunity here. The second reason that this earnings report is important is because of what I just said. They are the second largest consumer discretionary company in the world. So they are the heartbeat of the consumer. And if Amazon's doing well, the consumer's doing pretty well alongside it. So that's something very important. So we got a nice beat there. And then we heard from Apple. Apple sees another big quarter driven by strong iPhone 17 demand. We see the company growing their revenue 12% year over year, and they really haven't even harnessed the AI opportunity yet. Tim Cook in the earnings call alluded to the fact they're open to mergers and acquisitions, and anything and everything is on the table here for them to seize the AI moment. So I think that's tremendous for them. And of course, he said that the iPhone sales are for the 17 are running hotter than any of the phones over the last couple of years. So again, another consumer tidbit, if you will, on the consumer, that the consumer seemingly is doing okay. Then we had news from NVIDIA that NVIDIA is teaming up with Palantir, two of our favorite companies, right, to go after the corporate logistics business. So, I think this speaks to the validity, right, not just the validity of Palantir, that the greatest company in the market, that being NVIDIA, is partnering with them, but it just shows that the market opportunity for AI and software and hardware, there's a lot of room for multiple players to succeed here. And the total addressable market is just far greater, I think, than many people are giving it credit for right now. So that was tremendous to see. We love both companies, love to see them teaming up. and the stock price is reacting favorably to that. So let's take a look at the market here together. Here's our S&P 500 continuing to creep and crawl its way up the target, right? A little creepy crawly action for Halloween. Markets really shot out of a cannon on Monday and Tuesday, big rally. And now, like when you have these little gaps, and I'll zoom in a little bit, you can kind of see the market leaped higher 3 days in a row. Now you get a little bit of a backing and filling action here to end October. So still a winning week. And let me show you that on a weekly view just to give you a different perspective here, right? Oh, that's a little bit stretched. But week by week here, you can see that the market is tacking on gains. Every candle that we call these represents a week in the market. So even we had that big pullback 2 weeks ago, right, October 10th, and then the market has just continued to stair step itself higher. So that's very bullish action for markets, and we continue to have catalysts next week and the week thereafter with more earnings to come to tell us really just how long and how far that this trend can run. So very important stuff there. Also, as I mentioned, today's the last day of October. We're about to move into November. We're also about to move into the best 6 months of the year. The November through April stretch historically sees a gain of about 7%, higher 76% of the time. It's better than any other 6-month stretch of combination that you could find in the year. So we're coming into a favorable seasonal period there. Also, let me just try to get out of your way here. November market performance in post-election years. You can see all the different indexes are listed in different colors here, but there's one common theme that you can pick up from this chart, and that these lines are moving up and to your right, folks. Gains on average for the month of November are something that investors have come to expect. So again, moving into a favorable seasonal period. And also, that's one thing. Let me just go back here for a moment. Let me just show you this for a second, okay? This is the monthly view. Let me just adjust really quick. Here's our monthly view, okay? So again, just like I showed you the weekly a moment ago, every candle on this chart, every block that you see, if you will, represents 1 month in the market. Now remember, we are completing October today. We were told that August, and when I say we were told, by the pundits, right, that August, September, and October were going to be 3 very dismal months for the market. And if you take a look, here's August, here's September, here's October, folks. 3 months of gains for the market. That in and of itself is a strong signal that the market is sending about what is to come. And like I've been saying ad nauseum here, I have a feeling, a very strong one at that, that our year-end target is going to prove to be too conservative in nature. So you can feel the momentum in building in the market. You can see the buying pressure underneath the market. So it's something that we are looking forward to seeing how it plays out. Okay, the next thing I wanted to share with you, I thought this was phenomenal. Let me just cue this up here. So we got earnings yesterday, right, from Amazon, as I mentioned. And this is a post from Andy Jassy, who is the CEO of Amazon. And I want to show you this just to show you the sheer magnitude and the scale of the investment that's being made in AI, okay? And I want to share this with you to say this, okay? Andy Jassy, you can read it here. About a year ago, this site that I'm going to show you right now was nothing but cornfields in South Bend, Indiana. And now you will see this is the debut of their Rainier data center, okay? The amount of money, time, effort, and energy that was put in to build this thing. And really a marvel to pull it off in a year. So the next time that you hear people talking about the AI bubble, do you think Andy Jassy, who runs the largest consumer discretionary company in the world, being Amazon, do you think that he might have a little bit of a better pulse on the economy, on the consumer, and on the trends in this economy than, perhaps somebody that you see at a party or a colleague at work that says AI is in a bubble, right? So I'm going to run this for you real quick just so you can see just the sheer magnitude of this project. Again, South Bend, Indiana. This is the Rainier Data Center, and I'll come back in here to wrap it up. I mean, how magnificent is that, right? Just a marvel that they were able to build that in such a short period of time. So again, the opportunity here in this AI trend is going to last years, And we are not in the eighth or ninth inning, folks. This is the bottom of the first, top of the second. There's a long way to go. You could tell by how these companies are spending their money. So let's take a look next week. Major economic reports, probably won't have any, right? Government's still shut down. We will have some Fed speakers. We'll get some manufacturing data, a few Fed speakers, and then we probably won't actually get the unemployment report or the jobs report on Friday, right? Because again, the government remains shut down here. So we're not getting much on the jobs market. We will get private payroll data on Thursday from ADP, so we can kind of get an idea where the jobs market is. But again, the Fed cited at their meeting 2 days ago, a little difficult to affect monetary policy when you really don't know what the jobs market is doing, as well as some other factions of the economy. So let's take a look and wrap it up with some consumer investor sentiment. Investors, as we have the highest weekly close ever for the stock market, as we have stocks like Amazon with their highest close in company history, investors are still very fearful, right, folks? So, the volatility that you see in price is certainly doing its intended effects on many investors, as it has them all balled up in fear right now. So I think this sets up well as we move here into the last 2 months of the year. So, as always, if you have any questions, reach out to us. We're always here to talk to you about anything that matters with your money. But in summary, markets are setting up really well to finish the year strong. We are very happy with how we're positioned, and we think the results here that we've gotten in earnings this week and those to come will continue to validate the trends that are in front of us. So we hope you have a great weekend, and we'll see you back next week for Heritage Insider Weekly.